So yesterday we saw mortgage rates spike to the highest level that we've seen in 14 years. So what is actually going on with mortgage rates? And I'll say interest rates in general. Well, the great question. So today we have another piece of the inflation front, the PPI. What the PPI is on the producer side of the equation, how much inflation is there. So you have to look at there's producer inflation and there's consumer inflation. How it trickles through is basically whatever the cost at the producer level, as that goes up, we're going to obviously see that number click over through the CPI. But let's put all this in the context. What exactly is going on with mortgage rates and the whys? Okay, so here's what we're seeing right now. Inflation numbers are out the roof. So what the Federal Reserve is trying to do most diligently is driving down inflation. How's the easiest, or what's the one component in there that they could kind of control in a quasi way, and I'll explain in a little bit, to drive down inflation overall? So let's break this down. I think you're going to find this really informative. So we had the producer price index come in today, and it was basically flat. There's nothing there, which is great news for down the stream. So again, what you got to look at is as producer prices go up, well, eventually it's going to trickle down to the consumer side. So if the producer side of the equation is starting to flatten, that's good news for the consumer. But there's one component here that a lot of people oversee. The piece of that puzzle is housing, but let's get over to what exactly the PPI is. So first let's look at the PPI, the producer price index, is that something that the Federal Reserve really monitors? Well, let's go over to this screen right here, and I'm going to show you exactly what they monitor. So this is I'll put this link down below, but this tells us right here on this front, sometimes also known as the wholesale price or finished good PPI. The PPI data is widely considered a leading indicator of inflationary pressures within the economy. As a result, it is often used by central banks as a justification for adjusting interest rates. Okay, so that's that part of it. So the PPI is a more, I guess, recognized number from the Fed than other numbers. So let's start digging into this data. So far this week, here's what we have. We have the consumer side of the inflation, which came in at double what the expectations were. But look at the producer side of the equation. I'll get out of there real quick. It was down 0.4 previous month. The expectations were negative 0.1, and it came in right in line with expectations. That is good news. So we'll basically see mortgage rates stabilize today after yesterday's debacle. But let's get over to how can the Federal Reserve, so let's look at it this way. What can be done to really drive down the CPI number or the inflationary numbers? So as you see on the screen, how to improve the measurements of the housing costs in CPI. Why? So why are we looking at the housing market in such detail right now? Well, the biggest component of the CPI is right here. You can see that housing or shelter makes up between 31 and 40% of the CPI. So just think, if we could drive down the housing number, the shelter number in our inflationary numbers, what would that do to the numbers? Well, let's look and see what these chart looks like for the housing market CPI numbers. So that leads us up to over here. We can see right here, here's the numbers on what the shelter piece of the CPI has done over the years. You can see that it's been stagnant throughout years. So basically for years and years and years, it was basically steady at a 2 or 3, 4% clip. And you're seeing that go through here. And then all of a sudden it dropped, which we knew it dropped in, when the worldly crash of 2008, 2010. Then we got back to normal, okay, and stabilized through these areas. You can see everything for the last, who knows how long, 20, 30 years, have stabilized or been in between the 2 and 4% range. Okay, but all of a sudden, look right through here. That one thing that I was saying, what in this puzzle just doesn't make sense or stands out like a sore thumb? Well, obviously here we see the crash. Well, we've lived through that crash, but look over here. The spike that we've seen basically from February or January of 2021, you can see right here where this number was 1.59. all the way up to where we are today at 6.25. So a 500% increase in the shelter portion of the CPI. So now you ask yourself, or you finally realize, okay, I understand why now the Federal Reserve is basically trying to take a chunk out of the housing market. So hopefully that explains mortgage rates for you and why the Federal Reserve is really out to crush the housing market. So truly, Why are you here? Well, you're here to figure out where mortgage rates are. And I told you yesterday what would happen in the stock market. Yesterday, if you check out yesterday's video, and I'll try to put it right here, is I said if the CPI number comes in bad, we're going to see the stock market probably drop 600, 700, 800 points, maybe 1,000 points. And we're going to see mortgage rates go up 0.25%. What happened yesterday? Well, the stock market went down 1,000 points, just like I said. And let's go over to where mortgage rates are. So here's where mortgage rates are today. Holy cripe. It's up 0.3. So 30 basis points, or a little bit over 0.25%. You can see here, we are at the highest rates in 14 years. This is where we basically peaked out right now at the 52-week high. So if you see the range right here on the 30-year rates, you can see where we were. And this was just, I think I did the research on this. This was in October of 2021. So not even a year ago. We have 2.9 was the lowest rate. We've basically doubled since that point and over exceeded the double. We're at 6.28 right now. So here are where mortgage rates are today. These are the top 6 products out there. These are not my rates. These are no individual lender's rates. These are mortgage rates published by Mortgage News Daily. They do this every day to give us an update on what the national averages are on each one of these cells. I put the link down below if you want to check that out as well. So what this represents is somebody looking to buy a property for $500,000, putting 20% down, 740 credit score, single family residency. That's going to be their primary home. And here's where the rates would be. So I publish this every day just because it's easy to read. What we offer you is a free service. If you're in the process of a mortgage right now, all we ask you to do is send us the mortgage quote that you're getting from the other places, and we'll be more than happy to review that for free. We'll get back with you within probably an hour. And what we usually do is we usually do a video or do at least a conference call with you to go over the numbers that you're getting and what we would be able to offer you. Many times we can't help you, but majority of the times what we can do is get you a lower rate and lower fees. And that's the whole point of this. So if you like my videos and you like what you see, please don't forget to give us a thumbs up, subscribe down below, and check us out on podcast. No matter where you are or where you get your podcast from, do me a favor, just search Dan Frio. You're going to find the Mortgage Update with Dan Frio that contains this information and much, much more. So thank you so much for watching. God bless. I'll see you tomorrow. Bye-bye.